Welcome to Alpha Recap, your quick, sharp rundown of the day's market moves. Markets closed April 8th with a lot of divergence across sectors, and today we're digging into what drove winners and losers. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Big day. Not a one-way tape, but some clear pockets of strength and weakness that tell a larger story about risk appetite and structural shifts.
So, give us the headline. What wrapped up the session for markets on April 8th?
Right. The headline was a reported 2-week U.S.-Iran ceasefire that lowered near-term geopolitical risk. That pushed crude a bit lower and helped lift risk assets. And that relief was a big part of why crypto and some cyclical names did well.
And crypto was one of the standouts?
Exactly. Bitcoin staged a relief rally. It pushed back above about $72,000. That helped exchanges, custody providers, and stablecoin firms get a bump on the day.
Nice. So crypto rallies on geopolitics easing. What else popped?
Utilities and clean energy names did well. Project announcements and state grid policy wins supported renewables and storage stocks. Cannabinoid-related names also ran on a stream of state regulatory wins and better Canadian retail sales. Materials and miners got support from contract renewals and processing MOUs.
I mean, when you step back and look at this, it sounds like selection was everything today.
Absolutely. The overall tone was selective bullishness. Some sectors rallied while others wrestled with structural issues.
Okay, let's dig into the outperformers first. Start with crypto and walk me through the mechanics of why it rallied beyond the headline.
Sure. The ceasefire shaved geopolitical risk premia, which eased flows out of safe havens and into higher beta assets. That, combined with ongoing policy developments, like stablecoin sandbox programs and exchange license interest globally, lifted appetite. Also, there were infrastructure moves, like a notable payments spinout seeking $50 to $100 million that signaled continued build-out beyond token speculation.
$50 to $100 million? That's a healthy raise for a spinout.
Yeah, it shows that some crypto projects are trying to build sustainable payments businesses rather than just ride price cycles.
Give me renewables in plain English. Why did utilities and renewables get a lift?
Multiple things converged. There were project announcements, including a 1,750 megawatt geothermal organic Rankine cycle deal, and state policy changes like a grid utilization law in Virginia. Combine that with increasing data center power demand, and you get predictable, multi-year revenue visibility for developers and regulated utilities. So the market rewarded that steadier cash flow profile.
1,750 megawatts. That's massive.
It is. That kind of size changes project economics and helps make long-term revenue models more visible.
Cannabis also showed strength. What's behind that move?
State-level regulatory wins. Massachusetts, and renewed momentum in Pennsylvania. Plus, improving Canadian retail sales reduced policy uncertainty. When policy risk eases, multiples tend to re-rate, especially for multi-state operators with clean balance sheets and scalable retail footprints.
Short reaction. Let's flip to the underperformers. Tech was mixed despite AI headlines. Walk us through that tension.
Yeah, this was one of the more interesting splits. On the software and cloud side, fresh model rollouts from big names lifted AI demand themes, more capex for cloud and networking, but hardware and device names were softer. Things like reductions in device support and rising NAND and SSD pricing created margin pressure for PC and server OEMs. In short, software and recurring cloud consumption benefited. Hardware felt the pinch.
So AI is both a demand driver and a cost center.
Exactly. AI spending supports data center power, networking, and cloud services. Good for some industrial suppliers and utilities, but it also increases one-time capex and stresses supply chains for components.
Banks and finance were choppy as well. What was happening there?
The sector was uneven. Some firms reported a tough first quarter. Fintech layoffs and integration costs from deals dented sentiment, and bond market caution limited upside. So equities were sideways to weak overall.
Short reaction.
Right.
And consumer and retail? Mixed signals, I think.
Very mixed. Wholesale strength at a well-known apparel brand surprised positively, and there was a $1.4 billion beauty deal that showed MA and assortment activity is alive. But grocers faced gas-driven traffic declines and litigation headlines that pressured margins for some chains. So again, dispersion.
Let's pause and talk about cross-sector themes. What's the through line linking these moves?
There are a few clear correlations. 1. Geopolitics has an outsized, immediate effect. The ceasefire lowered oil and gold risk premia and supported risk assets, including crypto. 2. AI is creating winners in software and cloud while pressuring hardware. 3. Policy and regulation, state wins for cannabis and grid policy for renewables, are acting as direct earnings catalysts. 4. In consumer, real-world demand signals are diverging from margin stresses. And 5. Crypto's price movement is re-establishing its link to broader risk appetite.
That's a lot to hold in your head, but useful.
Yeah, and the common thread is dispersion. Headlines move markets, but structural, idiosyncratic factors are driving which sectors actually benefit.
Okay, let's walk through some of the significant moves with context.
Bitcoin recovered toward about $72,000 on the ceasefire, and reports of renewed stablecoin activity and exchange license interest. On renewables, that 1,750 megawatt geothermal deal plus Virginia's grid law created a constructive setup for regulated utilities and independent power producers. For cannabis, state wins in Massachusetts and political momentum in Pennsylvania helped lift names again. In tech, big model rollouts from major firms helped software names, while device support cuts and rising SSD prices pressured hardware. And retail saw notable MA activity, that $1.4 billion deal in beauty, even as grocery margins wobbled.
Honestly, I was a bit surprised by how much policy news moved cannabis stocks.
Policy clarity has historically been the biggest dampener on valuation for that sector. So once that overhang lifts, even slightly, it can re-rate the group.
Quick reality check. What should listeners monitor that actually matters to portfolio sensitivity?
Analysts note a few actionable signals. For energy, track forward-looking indicators like LNG restart timelines, refinery utilization, and jet fuel inventories rather than headlines alone. For tech, differentiate between names with recurring cloud revenue and those reliant on one-time device sales. For cannabis and renewables, follow state policy timing and interconnection queues. And for finance, watch yield curve dynamics and bank funding spreads as signals of credit and liquidity stress.
Short reaction.
Yeah, that tracks.
Risk check. What could flip today's narrative?
Several things. The ceasefire is conditional and limited. Any re-escalation in the Middle East would quickly reverse the risk rally. Regulatory delays or adverse rulings could re-pressure cannabis and crypto. If AI capex disappoints or cost controls slow spending, tech multiples tied to future revenue could re-rate. And finally, persistent energy or semiconductor supply constraints could keep margins squeezed in those sectors.
So more headline risk than usual, but also clear structural stories.
Exactly. The market is highly selective. It's about picking subsegments with durable revenue visibility and clear catalysts, not broad sector bets right now.
Before we wrap, give us 3 clear takeaways listeners can walk away with.
1. The ceasefire compressed geopolitical risk and lifted risk assets, but it's conditional, so keep watching headlines. 2. AI is polarizing winners and losers. Favor exposure to recurring cloud consumption and be cautious on hardware that faces one-time capex and component pressures. 3. State policy moves are real earnings catalysts for renewables and cannabis. Track implementation timing for concrete impacts.
Final short reaction.
Big move.
Quick reminder, this episode is informational only. We are not offering personalized investment advice or specific buy or sell recommendations. Analysts note and data suggest trends, but listeners should do their own research or consult a licensed professional for personal decisions.
Exactly. Data and headlines inform the conversation, but they aren't a substitute for tailored advice.
All right, that's our recap of April 8th, a day where politics, policy, and pockets of technology all decided different winners and losers. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next time on Alpha Recap.